Welcome back, traders, to this video where we're going to be looking at how to overcome prop trading struggles. So, prop trading struggles, very common topic among many prop traders throughout all of the prop industry. If you're trading for our prop firm or another prop firm, there are so many similarities in the struggles that traders make. So we're going to go through them one by one and basically break down exactly, what traders should be doing and how to potentially iron out any improvements in your own trading. Now, before we actually get into it, it does require some level of self-awareness, especially as a prop trader, and understanding your own trading style, where you're at in terms of your trading career, how long you've actually had it in terms of experience. And every trader is individual. We all have different trading styles, so that we just need to make sure that we are understanding always how to improve and adapt our own trading plan. Even the best traders out there who are in the top 5%, who have massive edge over the market and other traders, they're still always going to be looking for how to improve their edge, how to actually increase the profitability and also decrease the amount of loss and the losses that they actually take on their trading account. So the most common actual mistake for prop traders is over trading. We've seen this time and time again from traders who have come with us, started to trade, and they always feel like they do need to be involved in the market in some form or another. So especially the most common reason why traders may slip into a little bit of drawdown, and then it becomes a little bit of a slippery slope, because they're always wanting to be involved in the market, therefore they're always placing a trade. The question that we always get is, do more trades equal better trades? Obviously, it depends on your trading style, but in most cases, not. Usually, you want to look for more quality trades, which means, decreasing the amount of trades that you're taking. Now, whilst we do advocate, a heavy amount of trades in terms of data, so that you can look for win rate and actual profitability rather than just trying to be lucky with trading one to, let's say you place 5 trades in a month, then that's the style that we would want to be looking to achieve as traders, rather than just placing one big trade and trying to get lucky on that one trade. The fact that we don't have to always be in the market is a crucial concept. We don't need to not trading or not being in the market is a position in itself. If you're going long, or if you're going short, or if you're just sitting on your hands and waiting for the opportunity to come, then that is definitely a method that you need to really adapt if you're always being in the market. As soon as the market opens, or as soon as you wake up, you're basically placing trades. Always try and be a bit more critical about your decision-making process and what actually identifies a trading setup. Now, the next phase is obviously going to be heavily influenced on each trading decision, each trading spot, and where the trade is on an open trade, for example. So changing or modifying the position out of greed. Now, this comes into play when a trader may actually look at a chart. Perhaps it's gone into a bit of profit. Maybe they were actually looking to bank maybe 30 to 40, maybe even 50 pips, but the market has moved quite aggressively, let's say 20 pips, and they think that the market will actually continue in their trend, so they actually widen the take profit much more, to try and actually get more profit out of the market. And then traders, wanting more profit out of a trend, they won't think the trend will basically end. But as we all know, the market does fluctuate, and the trends do break, adjust, and change. We need to allow for pullbacks in certain situations. So always make sure that you have a plan before you enter a trade. Know exactly how much you're going to be risking on that trade, in terms of percentage, in terms of monetary value, in terms of pips. Know where you're going to get out of the market in terms of profit as well. So you need to understand your entry, stop loss, take profit, have them all secured, and have a plan and structure in place before you enter the trade. Now, it is possible to close trades early or modify position depending on market conditions. but taking profit out of the market is, you know, a vital aspect in terms of being a trader. Bringing stop losses into profit is also works in some strategies, depending on, you know, exactly the market movements that you're looking for. And if you're trying to scalp, then perhaps it, you know, might not be the best case. But if you're looking for a swing trade and just looking to bank a bit of the percentage, then you do want to be doing that in those cases. But modifying the position out of greed or even sometimes fear can lead to, you know, poor results in terms of prop traders. And speaking on the lines of self-awareness, we do need to take steps in order to actually grow out of bad habits. So that can be small steps, but we first need to recognize that we actually do need to adjust the trading plan at certain points. A lot of traders can get stuck in certain styles. Maybe they've used a style that has worked briefly in the past, and they're just trying to replicate it over and over and over again, or they're just constantly trading without actually thinking about actually how to improve their trading plan. And then they might actually go into drawdown, lose an account, get another account, and then perform the same negative trading habits, such as not controlling the risk correctly, not actually identifying the correct lot size to use in terms of their trading scenario. They might be risking too much in terms of a lower certain amount of pips in terms of stop loss. So we do need to understand and have self-awareness, and also just that reality check from time to time. It might be every week or every month. Just understand what's happened in the previous period, look at the trades, look at the analysis that you've done, go back through the journal and try and then build upon what's worked, what hasn't, and then look at the market to come, look at the fundamentals to come, and then what you might actually change in terms of building an overall better trading structure for yourself. Now, building a better structure for yourself might mean you do need some support. So searching for a mentor or ongoing trading coach might be the viable option, especially as they're going to be able to offer the more professional assistance and help that you need to actually improve. And sometimes that we often overlook things ourselves, or we don't understand what we're actually doing wrong until someone tells us otherwise. So oftentimes support out there can support your trading style frequently as you're trading, on a weekly or a monthly basis, which can really help you as a trader and build upon more profitable performance. And finally, just that trading is a very mental game. Traders who have traded with us before, or have traded on themselves or elsewhere in the past, they will know that it's a very mental game and very psychological when it comes to actually your wins, your losses, and how you've actually been trading. So just knowing how to basically mentally recover or even take breaks is a very good aspect of trading. Taking a break for a day, 2 days, or even a week can lead to more sharper decisions, understanding of how you've basically been trading. It can be difficult to actually switch off, especially just closing down the computer after maybe a loss or even a win, because traders who might get overconfident after they've won a trade want to get straight back into the market. So even then it can be difficult to actually take some time away and time for yourself to reflect. But that's what you really, if you do want to become one of these top level traders, the ones who are making serious amount of income, higher profit shares in our prop firm, you want to be understanding and taking time to build upon your trading plan, in terms of your mindset, psychology, the risk parameters, adjusting risk parameters where needed, and also the technical analysis and your journal work as you go. So that's it for this video. Obviously drop any questions below if you do have any, and stay tuned for more videos to come. Trade safe.